Okay, so imagine this. A company, right? Tiny traditional revenue, like barely a blip, but suddenly it's valued in the billions.
Billions, yeah.
Not for what it does, operationally speaking, but for this audacious all-in bet on just one single, really volatile digital asset.
It's quite the story.
It is. And today we're diving right into that kind of radical corporate transformation. By the end of this deep dive, you'll understand why this company's future hinges, well, less on its old business and almost entirely on the wild ride of Ethereum. Welcome to the deep dive. Our mission today, to really unpack Bitmine Immersion Technologies, Inc., ticker BMNR. We're using a full analysis as of September 5th, 2025. The share price closed at $42.19 that day.
Right.
We'll explore how BMNR went from this niche crypto miner to basically a massive digital asset treasury and what that actually means for its valuation, the risks involved, and its potential, which is, well, potentially good.
Yeah, it's a fascinating case study. It really forces you to question, all the traditional ways we value companies. This isn't just about the numbers on a spreadsheet.
No.
It's about a bold strategic gamble, the personalities driving it, and these unique market forces kind of swirling around it. It really pushes the boundaries of what corporate strategy can even look like.
All right, let's get into it. Part 1, the foundation of transformation. And our first chapter here, Chapter 1, business analysis. From immersion miner to Ethereum Titan.
Okay.
So let's unpack where this company came from. Founded way back, 1995. Originally Sandy Springs Holdings, it started as an industrial-scale digital asset miner, mostly Bitcoin back then.
Standard stuff for the time.
Right. But then, mid-2025, boom, this radical pivot, they completely redefined themselves. Now they're a Bitcoin and Ethereum Network Company.
And what's really striking is just how fast the main driver of shareholder value flipped. Completely.
Yeah.
It's no longer about, making a profit from the mining operations day to day. It's almost entirely about the value of this enormous digital asset treasury going up.
And how'd they fund that treasury?
Well, that's key. Through large-scale capital raising. Things like PIP deals, that's private investment in public equity, and ATM offerings at the market share sales.
So basically issuing tons of new shares.
Exactly. Selling shares to institutions or directly into the market to get the cash to buy all this crypto.
Yeah.
Huge dilution, yes, but also brought in massive amounts of capital very quickly.
Okay, so let's break down the old versus new business model. Legacy, dual income streams. They mined crypto themselves, mainly Bitcoin. And they hosted mining gear for other people, third parties.
Right, a fairly common model in the mining space.
But the new model, it's overwhelmingly focused on just aggressively buying and holding digital assets, especially Ethereum, for the long haul.
Yeah, long-term investment.
Mining operation, it's still there, but it feels more like a secondary thing now. Maybe brings in some cash, gives them some operational street cred.
Exactly. It's supportive, but it's not the main event anymore, not by a long shot.
So key products and services then. They've got this proprietary immersion-cooled data center tech.
Right, that's their special sauce, technology-wise.
They claim it boosts hash rate that's mining power by 25–30% and cuts cooling electricity by up to 40% compared to regular air cooling, gets the PUE down to 1.05.
Which is incredibly efficient. PUE, power usage effectiveness. 1.0 means all power goes to computing, 0 to cooling. So 1.05 is really, really good. Minimal waste.
They also still offer mining as a service MOS, basically renting out their infrastructure, plus advisory stuff for companies wanting Bitcoin treasuries and trading hash rates.
But honestly, for you, the investor, the main product now is the crypto treasury itself. Full stop.
How so?
Well, BMNR gives public market investors this leveraged way to get exposure to Ethereum. The market basically treats the stock like a stand-in for a spot Ethereum ETF. A way to bet on ETH without actually holding the coins.
And their market position, the scale, it's pretty wild after this pivot. Late August 2025, they just declared themselves the #1 Ethereum treasury in the world.
#1 ETH treasury globally.
Yeah. And #2 largest overall crypto treasury. Only MicroStrategy holds more crypto assets.
And the scale is just immense. We're talking over $8.98 billion in crypto and cash by the end of August 2025.
Wow. What does that break down into?
Over 1.86 million ETH tokens. That's the big one. Plus 192 Bitcoin and about $635 million in cash they can use freely, unencumbered cash.
Jeez.
And this whole transformation, it's made BMNR one of the most liquid stocks in the U.S. Huge trading volume, massive interest.
So the value proposition totally shifted. It's not we mine efficiently, it's We are the premier publicly traded way to get big exposure to Ethereum.
That's the pitch.
And management's goal is, well, it's ambitious. They want to acquire 5% of all circulating ETH. They call it the alchemy of 5%.
Alchemy of 5%. It's a catchy phrase, very bold, captures the ambition.
Okay, industry context. BMNR is kind of sitting at this intersection.
What?
Two high-growth areas. First, crypto mining itself. Worth about $2.44 billion in 2025, projected to hit $4.43 billion by 2032. That's like an 8.9% annual growth rate. And the trend is towards green mining, right? Using renewables.
Right, about 62% use renewables now, which is a big shift.
Second area, immersion cooling. That market was $286.8 million in 2024, but projected over $1 billion by 2030. That's a huge jump, 23.6% HER. Driven by AI, high-density data centers needing better cooling.
So they have a foot in both camps, operationally speaking.
British.
Well, as a miner, you've got names like Iris Energy, Marathon Digital, the usual suspects. But as a treasury, the main comparison is MicroStrategy.
Yeah.
But they're all about Bitcoin. BMNR is really unique with this massive, almost pure play focus on Ethereum. They carved out their own space there.
And the regulatory side, you mentioned, is dynamic.
Very dynamic in 2025. BMNR points to things like the Genius Act and the SEC's Project Crypto as potentially game-changing.
Interesting bit about NASDAQ rules.
Yeah, NASDAQ started putting more scrutiny on crypto treasury companies, sometimes making them get shareholder approval for big share issuances. But BMNR is listed on the NYSE American. So those specific NASDAQ rules don't apply. And they'd already done their big Pipe E deal anyway.
Barriers to entry must be high here.
Oh, absolutely. Mining.
Yeah.
Super capital intensive. You need ASICs, those specialized mining chips, tons of infrastructure, and crucially access to cheap power. That's huge.
Plus their tech.
Right. There were proprietary immersion cooling.
Yeah.
And then there's the sheer credibility factor. You need serious clout to convince investors to give you billions to just buy crypto. Not easy.
Competitive advantages then. Brand strength seems key.
Chairman Tom Lee.
Huge. Tom Lee, co-founder of Fundstrat Global Advisors. He's a very well-known, influential market strategist. His alchemy of 5% narrative, that clearly resonated.
It attracted some big names.
Premier institutional investors, as they call them. ARK's Cathie Wood, Founders Fund, Pantera, Galaxy Digital. That's serious validation in the crypto and tech investment world.
Cost advantages. That immersion cooling tech is a tangible edge. Allows overclocking, saves on electricity, plus they put their data centers in places with cheap power, like Texas and Trinidad and Tobago. Smart operational moves.
But the biggest asset
Is arguably the balance sheet itself, being the world's largest corporate holder of Ethereum. That is the unique asset alongside their cooling tech. It's a powerful combination.
Okay, that covers the business landscape pretty well. Let's move to Chapter 2. Management evaluation. Architects of an audacious strategy. Leadership team seems seasoned.
Yeah, average tenure 4.2 years. CEO Jonathan Bates came on board in May 2022.
How have they handled the volatility? The stock price has been a roller coaster.
Absolutely nuts. Like $4.50 up to $161, then back down to the $40 where it is now. Their response, crucial. They didn't panic, didn't back down.
No,
they doubled down, kept raising capital aggressively, and just kept hammering home the long-term vision. Takes a certain kind of nerve.
And that board appointment, David Sharbett?
Right. August 2025. He was on American Tower's board for 17 years. American Tower is a massive REIT, real estate investment trust.
So that signals.
A clear message. Think of us like digital infrastructure, an asset holding company. It's about framing BMNR for a different kind of valuation, maybe attracting a different type of investor eventually.
That was their communication.
Pretty transparent, actually. Frequent updates, weekly press releases on their crypto and cash holdings.
Weekly, wow.
Yeah, and they actively manage the narrative. Formal investor deck, Tom Lee does a monthly Chairman's Message video series explaining the ETH strategy. Plus, recent SEC filings show new employment agreements for top execs effective September 1st, 2025. It's really tying their compensation to the long-term plan.
Capital allocation seems simple, then it all goes to ETH.
Overwhelmingly, yes. The core business is now acquiring Ethereum, financed entirely by issuing new shares, those PIPEs and ATMs we mentioned. No M&A, no buying other companies, just ETH accumulation.
But they did approve a buyback.
Yes. The $1 billion stock repurchase program, July 2025. The idea is to buy back shares if the stock price drops below the net asset value per share.
Why do that?
2 reasons. 1, it's accretive. Buying back shares below NAV increases the NAV per share for everyone who remains. 2, it's a huge signal from management that they think the stock is cheap relative to its assets, a vote of confidence.
And no dividend, obviously.
Nope. Fits the growth and accumulation focus. All capital is reinvested or used for buybacks.
Okay, this brings us back to return on invested capital, ROIC. You said traditional metrics are kind of irrelevant here.
Largely,
Yeah.
yes. On paper, ROIC is terrible. Deeply negative, like -22% to -25%. Reflects the unprofitable mining.
Which sounds bad.
But in BMNR's case, you have to look past it. The negative ROIC isn't the story. It highlights the strategy. They're essentially running mining as a loss leader, maybe, for credibility, some cash flow. But the real bet, the whole game, is the Ethereum treasury appreciating.
So the real metric is?
Return on crypto assets, essentially. Will ETH go up enough over time to justify the dilution from issuing all those shares? That's the gamble. It forces you to redefine return for this kind of company.
It's definitely a different way of thinking, a VC approach in the public markets almost, but tying everything to one asset, ETH, that feels risky.
Oh, it's absolutely risky. Huge potential upside of ETH moons, but massive downside if it crashes or faces regulatory issues.
Right.
It's concentrated risk, high conviction. That's the deal.
Okay, let's get into the numbers then. Chapter 3, Financial Analysis, A Tale of Two Valuations, Market Cap, September 5th, 2025, $7.32 billion.
Right. Big number.
Key metrics. Trailing 12-month revenue, $5.45 million. Decent growth there, 89.77%. Fiscal 24 revenue was $3.31 million, up 413% from 23.
So top-line growth looks okay on a small base.
The earnings declined 52.4% annually over 5 years. And profit
Yeah.
margins, deeply negative. Gross margin, 18.84%. Operating margin, negative 35.65%. Net profit margin, negative 65.44%.
Yeah, operationally it's burning cash. But interestingly, TTM free cash flow is positive. $1.57 million.
Yeah.
Mostly driven by a strong Q3 2025 figure of $1.51 million. A huge YoY increase.
But $1.57 million FCF against the $7.3 billion market cap.
Exactly.
So,
Trivial. Almost meaningless in the context of the valuation.
I assure you,
Just underscores the disconnect between operations and market perception.
Financial stability. Consistent losses, widening losses. Debt to equity, 0.65. Moderate leverage, not crazy.
Good.
But the current ratio is 0.41. Below 1.0 means current liabilities are more than current assets. That could suggest maybe some short-term liquidity challenges, a potential worry point.
Definitely something to watch. Because they might need more cash soon if operational losses continue or they can't easily sell assets.
All right, valuation. This is where it gets wild, right? Traditional metrics.
I forget about it, basically.
PE, not applicable. Negative earnings. Price to sales. Get this, 1,343 times.
1,343. It's astronomical. Think about it paying $1,343 for every dollar of sales the operations generate. Tells you instantly the market isn't valuing the operations.
Price to book ranges from like 32x up to over 2,500x. Software industry average is like 3.8x.
Yeah, way outside normal ranges.
Right.
Traditional relative valuation just breaks down here.
So if those metrics are useless, how do we value it? What's the alternative?
You have to shift your framework. The most logical approach for a company that's essentially a holding entity is net asset value, NAV.
Okay, break that down for BMNR.
Simple idea. What are its assets worth? Take the total crypto and cash holdings, subtract liabilities, divide by the number of shares outstanding. As of late August 2025, they reported $8.82 billion in crypto and cash against 221.5 million shares. That gives you an NAV per share of $39.84.
Okay, $39.84 SEV, and the stock price was $42.19.
Right. So the stock was trading at a small premium to its NAV, about 5.9%. That makes sense. The market is pricing it based on its liquid assets, plus maybe a small premium for management, strategy, or future potential.
Now contrast that NAV with the DCF.
The discounted cash flow model. If you base that only on the current unprofitable mining operations, you get a fair value of just $1.56 per share. Maybe $1.88 if you're generous.
56 cents versus $42.
Exactly. It's not just a gap, it's a chasm. It powerfully shows investors are placing almost all the value on the Ethereum treasury and its future potential, and practically zero value on the mining business itself.
Incredible. Okay, let's shift gears into part 2. Market dynamics and the road ahead. Starting with Chapter 4, Market Sentiment. A battle between hype and skepticism. Analyst coverage is thin.
Yeah, very limited. Just one Wall Street analyst covering it as of our data point, but they have a strong buy rating.
With a price target.
$60 per share, 12-month target. From $42.19, that's a potential 42.2% upside, according to that one analyst.
And the media buzz.
It's a real mix. Lots of excitement, headlines about the hashtag #OneETH Treasury, Tom Lee, Cathie Wood's backing, the hype. But also plenty of caution. Notes about the extreme volatility, the risks in crypto. They even had to put out a clarification about those NASDAQ Treasury rules, not applying to them on the NYSE American. So yeah, it's seen as this high-risk, high-reward play that's definitely captured people's attention.
Market indicators paint a different picture, though. Short interest.
Significant skepticism there. 7.21% of the float sold short. That's 11.71 million shares, betting the price will go down. Not insignificant.
And technically, moving averages.
The stock price is below both its 50-day simple moving average, that's around $47, and its 200-day SMA, around $46.
Which means
Technically, that's bearish. Suggests recent downward momentum, short-term downtrend. The price action isn't confirming the bullish analyst view, at least not recently.
So we have this really interesting disconnect. Management's bullish story, the analyst's strong buy, but then significant short interest and bearish technicals. What gives?
It's classic tension, right? Suggests the market is really wrestling with this one. It's at an inflection point. People are weighing that huge long-term ETH potential against the immediate risks, the volatility, maybe taking profits after the run-up. It highlights just how polarized views are on BMNR.
Okay, let's look at who owns it. Chapter 5, ownership structure. Retail dominance with institutional anchors. Institutional ownership is low.
Relatively low, yeah. Around 4.0% to 5.75%. ARK Investment, Cathie Wood's firm, is the biggest known institution, holding 3.21%, about 5.57 million shares.
But management talks about premier investors.
They do. Founders Fund, Pantera, Galaxy Digital, these are big, respected names in crypto and venture capital. Even if their exact holdings aren't always clear from standard filings, their backing adds credibility, even if overall institutional ownership is low.
What about insiders?
They hold a meaningful chunk, 4.19% of shares. And notably, Chairman Tom Lee bought shares on the open market 3 times in July 2025.
He bought more. At what price?
Picked up almost 450,000 shares. Some at $4.50, some much higher at $44. And critically, no insider sales reported recently. That's a strong bullish signal from the guy driving this strategy. He's putting his money where his mouth is, even after the price swings.
Yes, who owns the rest?
The general public, retail investors. They hold the vast majority, somewhere between 90% and 94% of the common stock.
Yeah.
Highly diffuse ownership.
Wow, 90% plus retail? What's the impact of that?
It's a huge factor. It definitely contributes to the extreme price volatility we've seen. Retail sentiment can swing quickly based on news, social media, etc.
But potentially an opportunity.
Could be. That low institutional ownership means if BMNR successfully executes, de-risks its story, or if crypto becomes more mainstream for institutions, there's a lot of room for them to potentially buy in later. A future catalyst, perhaps.
Yeah.
Large institutional buys could really move the price.
Okay, let's get into Chapter 6. Risk assessment. Navigating a high-stakes environment. A SWOT analysis might help structure this.
Number 1 ETH Treasury position. That's huge market dominance.
Yeah.
The unique emergent cooling tech, strong visible leadership with Tom Lee, influential backers like ARK,
Right.
and massive liquidity in the stock.
Right. That #1 position isn't just volume. It might offer strategic advantages down the line in the ETH ecosystem.
Exactly. Network effects, maybe integration potential,
Weaknesses.
unprofitable operations, as we saw, extreme asset concentration. It's basically all riding on Ethereum. Massive shareholder dilution from all those share issuances, shares outstanding up, pick 6,800% in a year.
6,800%.
Yeah, huge dilution. And that weak balance sheet, the low current ratio, 0.41.
Opportunities.
Continued growth of Ethereum itself.
Yeah.
DeFi, NFTs, AI applications built on it. The separate market growth for immersion cooling tech and AI and high-performance computing, and the potential for the stock to trade at a premium to its NAV if sentiment stays positive. And that immersion cooling part could become more valuable if AI compute demands keep exploding. It's a potential hidden asset.
Yeah.
Obvious one. Crypto market volatility. A major downturn in Ethereum would hit them hard. Regulatory scrutiny is always a risk in crypto. And don't forget macro factors. Rising interest rates. That generally hurts high-growth, non-earning, speculative assets like BMNR. Higher risk-free rates mean future potential is discounted more heavily today. Investors might shift to safer things.
Yeah, good point. And there's a specific geopolitical factor too, right? Those U.S. tariffs on mining gear.
Yes. New tariffs in 2025. 21.6% on ASIC miners from Southeast Asia. Even higher, 57.6% from China.
How does that connect?
Well, those tariffs make expanding mining operations much more expensive. They directly hit the profitability of mining. And look at the timing. BMNR pivots hard to the ETH Treasury strategy in mid-2025, right when these tariffs are kicking in.
Ah, so the tariffs might have actually pushed them towards buying ETH instead of mining more.
It strongly suggests it could have been a major catalyst. Makes direct asset acquisition look much more attractive from a capital efficiency standpoint compared to buying expensive, tariff-laden mining rigs. Changes the whole economic equation.
Fascinating connection. Okay, let's wrap this up. Chapter 7, conclusion. What's the bottom line here?
This deep dive really shows BMNR isn't your typical company anymore. For all practical purposes, it's a publicly traded, highly leveraged bet on the future of Ethereum.
Simple as that.
Pretty much.
So the bull case summary?
You get leveraged exposure to ETH, managed by a credible team led by Tom Lee, who's heavily invested himself, backed by well-known crypto VCs and ARK. Aggressive strategy combining ETH buying with share buybacks below NAV. Plus, that immersion cooling tech has potential upside in the AI space.
And the bear case summary?
It's speculative, hyper-volatile, valuation totally divorced from unprofitable operations, values packed into one risky asset, Ethereum. Huge dilution has happened. Traditional metrics scream overvaluation.
Valuation summary. The market price, $42.19, was pretty close to the NAV per share of $39.84.
Right. Market's pricing the assets, basically.
But the DCF based on mining, like $0.56 is 88 cents per share?
Yeah, that enormous gap just hammers it home. Investors are betting entirely on the Ethereum treasury strategy, the mining business, worth almost nothing in their eyes right now.
Okay, concluding outlook. What does this all mean for you, the listener?
An investment in BMNR isn't like buying stock in, say, a consumer goods company.
No.
It's a high-conviction, directional bet. You're betting on two main things. One, Ethereum's price goes up significantly over the long term. Two, this management team can skillfully manage the NAV per share using their strategy of buying ETH and buying back stock.
Its success or failure really hinges on ETH.
Almost entirely. It rises and falls with the digital asset it champions. So as you think about this incredible transformation, here's a final thought. In this era of super fast tech shifts, how many other traditional industries might be ready for a similar radical pivot? A pivot that completely changes how we judge their value and future. What really stands out to you about Bitmine's audacious move?
Lots to think about there. If you enjoyed this deep dive, definitely hit like and subscribe to the Stock Analytics AI YouTube channel. And remember, for €4.99 a month, members get priority deep dives on tickers. We're covering all the S&P 500 stocks over the next few months. Members get exclusive priority access.
Yeah, lots coming up.
And if you just want a one-off deep dive on a specific stock, drop us a super thanks. We appreciate the support. Just a reminder, this analysis was generated by an AI system. It's for educational purposes only, definitely not financial advice.
Please do your own research.
Absolutely. Or talk to a qualified financial advisor before making any investment decisions.